Well, good morning everyone. Thanks so much for joining me once again. A couple of weeks ago I did get a comment asking me if I would take another look at the idea of trying to find 10 baggers, which is sort of a nice idea but very difficult to do. And so I'd forgotten about it really until I saw this announcement on Friday from Peregrine Gold talking about a spectacular gold mineralisation in a drill core at their Peninsula prospect. You know, this is all speculation, isn't it? It's a small company, only trades normally $8,000 a day, but on that announcement the market bid it up by 75%, and trading nearly $4 million on the day. So a massive increase in liquidity for the company, and a bit of interest shown, I guess, by speculators who are trying to make some sort of a guess at what they think the future might hold for this company. But when you look at some of the photos from the core samples, you've got to sort of put it into context. This one on the right here is the best one, I guess, across a section here which would be like about 15 centimeters, so about 6 inches, I guess. That is quite strong mineralization within there, but that's in a 6-inch zone. Down here 1 centimeter across here, and so across this 2 centimeter range some more evidence of mineralization. So based on that, the speculators have come in and bid the stock up. So yes, this could be a 10 bagger perhaps at some stage in the future, but cautionary statements issued by the company saying that the samples will be dispatched to the laboratory for analysis, and when they get the results back then they'll update the market. And also they're commenting that all the statements regarding plans with respect to the project are forward-looking. There can be no assurance that the company's plans for development of the projects will proceed as currently expected. So, you know, they're sort of hedging their bets there, a bit like my disclaimer that none of what I say can be taken as individual personal financial advice. So, interestingly, the company makes no undertaking to subsequently update or revise the forward-looking statements made in this announcement to reflect the circumstances or events after the date of that announcement. So, you know, a lot of uncertainty around this in my view. And so, you know, going on to the topic of, you know, finding 10 baggers, how many have there been recently? Well, running a scan through Stock Doctor over the last 12 months, it tells me that there are 5 companies that have increased in share price by over 10 times. That's 1,000%. But when you have a closer look at them, you see that in fact they are not 10 baggers at all. In the case of Aura Energy, it was in a trading halt 12 months ago, so you couldn't have bought it down there at that low price. The same thing applied with APM Human Services, couldn't buy it 12 months ago, and the same thing with Dominion Minerals Limited. This one was a possibility. You could have bought in here around September, October of 2021, but it was pretty thinly traded. It was only trading like about $8,000 a day. Now, if you're only putting a few $100s in, I suppose you could have got set, but right now it is currently in a trading halt. So, you know, while you've got a very nice increase in share price, you can't get out of it right now. And the last one, Western Yieldgarn, same deal. Not trading 12 months ago, and in fact since it started trading it's actually falling down in value. So overall across 1 year I'd pretty much argue there has been no 10 baggers from the 5th of August last year through to Friday. Now in that time there probably were some stocks that went up and then came down again. We'll talk about that a bit later. Looking at it across a 3-year period, we've got 47 stocks that have increased in share price by more than 10 times. Some of them probably for the same reason as Aura Energy won't actually be 10 baggers. Nonetheless, we've got companies here and we can see where it's coming from. Materials and energy, we've got the next screen, materials, energy, and the last one, 5 materials, 1 energy stock. So, you know, if you're thinking about going into the search for 10 baggers, perhaps materials and energy is the place to go. Remembering though that of course those 2 spaces actually do take up about half of the Aussie market. So looking at that, I did count them up. There are 32 of the 47 companies are actually from the materials and energy sector. Many of them don't trade very much. In fact, 7 of them don't trade at all. And then another few down here that trade less than $10,000 a day. So liquidity is a bit of a problem. So if you want to get in, you're just going to have to be a price taker. And there could be quite wide spreads in the prices when you look at the spread on your trading platforms. So bear that in mind. So for example, Eclipse Metals is was a big improver in price. Down here, I think it was like 0.2% or something like that 3 years ago. Got up as high as 6 cents, so it was way more than a 10 bagger. But 3 years ago, the average daily trade was only $2,100. And so, look, if you were looking at trying to put in $10,000 into a position in the hope that it's going to earn you $100,000 over a few years, well, it might have been a bit of a challenge to get set. Just as I said, something to be thinking about. And just a few more stats here. Of the 745 materials and energy stocks that have been traded on the ASX for at least 3 years, 316 are now worth less than they were 3 years ago. So there's a 57.5% chance that a random stock pick will give you a positive return over that 3-year period. 407 of the companies have beaten the share price appreciation of VAS, the ASX 300 index. So there's a 54.6% chance that a random stock pick will give you a better return over that 3-year period than being invested in VAS. If you ignore liquidity and whether the stock could be acquired 3 years ago, only 4.4% proved to be 10 baggers or better, but of those, many were quite illiquid, and in some cases, as I said, were actually suspended from trading or actually never traded at all. And so it's probably not 4.4% as it first appears. Now, looking at the current state of play, around 450 of those 745 companies trade less than $50,000 per day. So getting set at your preferred entry price might be just a bit more of a challenge than you might have first thought. Even worse, if you decide to exit the position, getting out could be even harder, and that's something you need to take into account in deciding on your investments, I think. Getting in's okay, but you do have to get out at some stage or other, and if no one wants to buy your shares, well, okay, that's not going to happen, is it? But if you're taking the view that your potential 10 bagger will take some time to realise its promise of a bright future, then lack of liquidity in the short term shouldn't be a concern, provided you are prepared to see the share price fall for some time before taking off into the stratosphere. Sometimes true believers in a company can see their investment grow at a very sharp pace, and the prospect of that company reaching the status of being a 10 bagger seems almost assured. But reality can be quite humbling, with companies like Zipco, PointsBet, Novanix, DW8 Limited and Zuno, just to name a few, who either approached 10 baggers status or even surpassed it during the last 3 years, only to fall back to far cheaper price levels. At the time of recording this post, Zipco is down 91% from its all-time high in the space of only 6 months. PointsBet is down 81%, Novanix 75%, DW8 93% and Zuno 96%. I'm sure there are many investors, including me, who can relate their own stories of holding some positions long enough to see very significant paper profits evaporate in a relatively short period of time. And this is the ever-present danger of forming a locked-in stone opinion about an individual stock. As many of you are aware, PointsBet is my own current example, and I just have to accept that my simplistic analysis of the opportunity and the potential future revenues and earnings may be way off the mark, but only time will tell. So my view is that you go searching for 10 baggers really at your own peril. The chances of finding some in the short term is quite small, and the chances of finding a dud far higher. But if you are prepared to wait long enough, high quality companies will organically grow into 10 baggers or better. Just go back 10 years to August the 5th, 2012 and check out the share prices of all the companies that are currently in the ASX 50. There are 44 of them, and only one of them turned into being a 10 bagger though. That's Aristocrat Leisure, and its price has increased by 1,369%. But 20 of those 44 have delivered a compound annual growth rate well in advance of the annual return, including dividends, of the ASX 300 index. Familiar names such as Commonwealth Serum Laboratory, Goodman Group, Mineral Resources, Macquarie Group and ResMed have delivered returns that are double at least those of the ASX 300 index. These are companies that have a long history of increasing their revenues and earnings, and are the types of companies that my style of research is likely to identify. And getting compounded annual growth rates in excess of 20% over a 10-year period is a worthy goal to set for yourself, I believe. Now, I do know that not all of my investments will grow at that rate, but I do expect that 60 to 70% of them will, provided the market doesn't implode totally. In reality, the chances of my finding a 10 bagger in the short term is almost zero, and so I don't deliberately go looking for them. But some might just turn out to be 10 baggers in the end if I continue to hold them for long enough, and that's the final point I want to make today. It's the long game that counts. While it's nice to be invested in a stock which suddenly becomes the flavour of the month, that's always going to be more of a rarity than a commonplace occurrence. If it does happen, then perhaps some lightening of your position could be considered, because no stock can rise in price at an unsustainable rate for very long. Unfortunately, I've got no magic formula that tells me when it's time to reduce my position size, but I just have clear signals telling me when I want to buy in and when I need to totally exit a position. That does mean that I'll exit some stocks that continue to appreciate in share price. And because I've just started to introduce the idea of using a stop loss, I will get stopped out of some stocks only to see them rally after I've exited. That's just part of the deal. If you are determined to allocate at least a portion of your portfolio to speculative stocks in the hope of them becoming market darlings in the near future, then it would be very prudent to think about what percentage of your portfolio you will assign to that endeavour, in my humble opinion. And just to give you one example of how fundamental analysis could find you a 10 bagger without having a single clue about the merits of the business or an appreciation of the acumen of the management team or the competitive landscape within which the company works, here are the important annual financials for a mystery company for the years 2015 and 2016. As you can see, all very, very good. We've got net debt to equity massively negative, so a lot more cash than debt. The return on equity is strong at 25.81% and improving from the previous year. The return on invested capital is very big and improving. Net profit margin is widening above 20%. Revenue growth is strong, 57% per year. Net profit after tax growth, and as a consequence, earnings per share growth very strong. Had you bought the day after the June 2016 financials were released and held it to today, the price would have appreciated by 900%. That's not quite a 10 bagger, but pretty close, with a compound annual growth rate of 44%. And as you can see from the financials since 2016, you would be hard pressed to find a reason to sell other than, as I've said previously, to lock in some profits. For obvious reasons, I can't name the company just in case you get the idea that I'm advising you to buy it. But if you would like to have a guess in the comments, I'll let you know next week how many of you were correct. But there is a big difference between a company that is consistently shooting the lights out on the balance sheet and one that is hopeful of a bright future but cannot supply any evidence that its product or its service will ever generate enough revenue and hopefully earnings to justify the lofty valuation that the market is placing on it. Well, that's enough from me, just a few of my thoughts. If you want to check out some more of my ideas and some of the information I provide to my patrons, you can check that out over on the Patreon page. And so until I catch up with you again next week, if you are searching for 10 baggers, I hope you are successful in that endeavour. If you're like me, just looking for a strong return over a long period of time, I hope you're being successful in that endeavour also. So stay safe and stay well. I'll catch up with you again next weekend.